Markets were doing just fine this morning. The PCE came in fine. We had good numbers from the Chicago manufacturing PMI, basically all good news. And then the consumer confidence numbers, or consumer, uh, you know, uh, those numbers from the University of Michigan came out, and the market seemed to take a tumble. Um, they weren't that bad. Anyway, we'll go into all of that here just in a few minutes. We'll cover it all. And I think going into the weekend, it's good to really understand where markets are right now and why. The markets are very stretched, and I'm seeing lots of sentiment out there that suggests that we could see some kind of a drop, maybe in September. September tends to be that kind of month, but long term, no, no, no. This economy is cooking. It's just going to get better and better. That's my personal opinion. It's not investment advice, but that's how I see it. And of course, for Tesla, I see it up and to the right. I explained that all last Sunday morning. Nothing has changed in my analysis during this week. Sawyer Merritt says Tesla has officially launched the new Model Y performance. It goes 0 to 60 in 3.3 seconds. That's 0.2 seconds faster than the old version. We're talking 3.3. This is an SUV. The range is about 308 miles. That's 1% lower than the long range variant. So now the range is, so you're kind of, according to one article, you're getting your cake and eating it too. You've got the performance on both the range and the speed. More range thanks to new high-density battery cells, which increased charge capacity. Top speed, 155 miles an hour. That is 30 some miles faster than I have ever gone in a vehicle. Carbon fiber decor, whatever that is. Don't know what carbon fiber decor even is. 16-inch first row QHD touchscreen. So that's gotten a little bit larger. First row sports seats with power recline, power tilt, heating, ventilation, and thigh extension. Adaptive suspension and unique drive modes. Everybody loves this new adaptive suspension. Footwell and door pocket ambient lighting, of course. 8 exterior cameras, including a new front-facing camera. So 8 exterior cameras. New front and rear fascia and carbon spoiler for better aerodynamics. I guess that was the teaser that we saw. Staggered wheel plus tire filament provides better grip and steering. High performance brakes, which enhanced pedal feel and improved heat management. Currently available only in Europe and the Middle East, although that was changed later to say only Europe. But they said in the announcement yesterday that it would be the Middle East too, so maybe shortly. But deliveries won't begin for 1 to 2 months. So we're looking at October, November before delivery start, but you can place your order now if you're in Europe or the Middle East. According to AMX Freeze, Zuckerberg pours billions to poach some of the best AI guys in the world. And then Elon Musk offers them a real purpose and gets them to come on board. Everybody knows that you can only trust Elon, and only he does the unthinkable, and he's the best leader. Only XAI has a real shot at AGI with Elon steering it. Elon has built the most powerful AI with the smallest team in the world, and now they're about to witness something even bigger. How could they not want to be a part of it? So you've heard the stories, I think. Upwards of, I heard it was as many as 12 people that have left Zuckerberg's offers and have gone over to be part of XAI. AJ pipes in. AJ's been a little silent. We haven't heard much from him for a while, but he says he wants to give us a quick update on Tesla. He says the stock currently slightly down in the pre-market, and it's definitely down now, about 1.5 points last time I checked. In this generally slightly negative market today, that's correct. The stock delivered 1.8% this week in a broadly flat market. So yeah, Tesla's done better than the overall market this week. The outperformance, he says, was driven, even though widely anticipated, by strong U.S. sales. No, I think the U.S. sales we had notices of reasons why the U.S. sales and China sales both would be better than we expected. And now we got Brian Wang expecting 500,000 plus in both third and fourth quarter. Four, however, traded volume is still quite low by Tesla norms, demonstrating that there was no needle moving news. Recent performance was mostly driven by increased FSD rate cut expectations. Fed, driven by increased Fed rate cut expectations. And stocks like Tesla benefited most from lower rates, long duration, especially automakers, which benefit from lower financing rates, helped this demand immensely. Yeah, I agree with that. I think the Fed rate cut was important both from the standpoint of cutting rates for cars as well as changing the discount rate on stocks like Tesla. Five, why still low trading volume? I believe the main reason is paradoxically the strong U.S. sales numbers. The higher the quarter three U.S. sales numbers, the weaker the quarter four U.S. sales number will be, unless the new lower cost Model Y can offset the trough in quarter four. AJ, you're late. I'm sorry, you're very, very late. No, the change in the IRS a week ago Thursday it means that we're going to have a phenomenal fourth quarter. Yeah, I'm sorry, but that's sorry. See, I think AJ has been out doing other things. He hasn't been posting nearly as much. He must be busy. All right. This is Randy Kirk. Please hit the like and the subscribe and the notify and all that jazz and join Patreon, because I think the entire month of September, one person joined Patreon. I did have a nice, very nice hit from a very good friend on Patreon of $100 special extra money, suggesting that I take my wife to dinner, which I did in the month of September. So, okay, in Big Sur, actually. All right, real earnings, which nobody bothers to keep track of. Now, let me say this again. I'm talking. This is no article. This is Randy talking to you. Real earnings, the amount of money that people have to take home after their taxes and after inflation, and nobody keeps track of it. Nobody's reporting it today. You won't find a headline about it. Is up again after Trump. It was up 1.65% month over month and 5.51 year over year. This is going to start having a huge impact on people's perception of their situation. And you'll see on the Michigan report this morning, people's current perception is quite good. And I think it's a Democratic problem. Anyway, we'll talk about that in a minute. Anyway, obviously this will need to continue if it's going to impact things. But right now, everything that's being done in the economy by this current administration is putting more money in workers' pockets, real money, spendable money, and they're spending it, quite frankly. CNBC says this: inflation edged higher in July, according to the Federal Reserve's preferred inflation measure. Now, I know I usually give you this in the raw, but this morning the raw data would not come up for me. I tried, I repeatedly pushed it, and it kept on saying that it was updating, and I couldn't get it. So somehow CNBC was able to get it. So I'm reading their report. Inflation edged higher in July, according to the Federal Reserve's preferred inflation measure, indicating that President Donald Trump's tariffs are working their way through the U.S. economy. Quite frankly, the report would have indicated that the tariffs are having no impact on the economy, or no impact on inflation, or conversely, maybe other aspects of inflation are going down, and there's a small impact from the tariffs, but I'll give you some reporting on that in a minute. The Personal Consumption Expenditures Price Index showed the core inflation, which excludes food and energy, ran at 2.9 seasonally adjusted, which was exactly what people were expecting. It was up 0.1% from June, but in line with expectation. On the monthly basis, the core PCE index increased 0.3%. Also in line with expectations. The All Items Index showed the annual rate of 2.6%, monthly gain of 0.2%, and that's exactly what was expected. The Fed uses the PCE price index as its primary forecasting tool. Though it watches both numbers, policymakers consider core to be the more important because it excludes volatile gas and groceries. Central bankers target inflation at 2%. So Friday's report shows the economy still quite a distance from that, but it's not going to impact the decision in September. Nevertheless, markets expect the Fed, I'm sorry, that's what I just said, to continue to drop the rate. Fed Governor Christopher Waller reiterated his support for a cut in a speech Thursday. He would be interested in a 0.5. The Fed opened the door to rate cuts, but the size of the opening is going to depend on whether labor markets weakening. I don't think the labor markets are going to weaken, said 𝐒𝐚𝐬𝐼𝐸, chief economic strategist at Morgan Stanley Wealth Management. Today, the inline PCE price index will keep the focus on jobs market. For now, the odds still favor a September cut. Stock market futures remain negative after the release, but it was just barely negative. It came down more later. Inflation numbers were held in check by a 2.7% annual decline in prices for energy, goods, and services. 2.7% annual decline in prices for energy, goods, and services. Food prices rose 1.9 from a year ago. That's good. 2%. See, perfect. The balance also tilted heavily towards services prices, which jumped 3.6 compared to just 0.5 for goods. On a monthly basis, energy was off 1.1%. Food was down 0.1%. Services prices rose 0.3, essentially accounting for all of the monthly increase in goods, as goods decreased by 0.1%. I mean, listen to all that good news. I mean, this is just fantastic. Personal income increased. Personal income, this is now from the actual report, not from CNBC. Personal income increased $112.3 billion, or 0.4%, at a monthly rate in July, according to estimates released today by the Bureau of Economic Analysis. Disposable personal income less personal current taxes increased $93 billion, or 0.4%. And personal consumption expenditures increased $108 billion, or 0.5%. Personal outlays, the sum of the PCE, personal interest payments, personal current transfer payments, increased $110 billion. Personal savings were at $985.6 billion in July, and the personal savings rate was up to 4.4%. I had Grok compile the retail earnings reports over this last week. We had a bunch of retail earnings from Dick's, from Best Buy, from Dollar General, from Burlington, and from the Gap. And according to Grok, solid earnings reports and good guidance. Consumers are doing fine, and tariffs are having little impact as these retailers are mitigating through sourcing and vendor negotiations. What have I been telling you? For a year, I've been telling you this. Broader context. Retailers like Walmart and Target, reporting earlier in August, echoed the themes of steady consumer spending, but selective price sensibility, with tariffs not as severe as feared, yet prompting careful increases. Overall consumer resilience supported beats, but tariffs, 30% on China imports, and full-year caution with limiting pass-through to shoppers. Some people reporting as little as 1%. This is the international trade deficit was at $103.6 billion in July. That's up from $84.9 billion in June. Exports of goods for July was nice, $178 trillion. And $1 billion less than June, but still strong. And imports of goods for July were 18 billion more. So that's where you see your 18 billion difference. Advanced wholesale inventories, which you know I don't care that much about, adjusted for seasonal variations and trading day differences, but not for price changes, were estimated at up 2%. And advanced retail inventories also up 0.2%. I'm sorry. Yes, 0.2%. Okay, breaking. Now listen to this. This is the Chicago Business Barometer. This came out about the time that the market was continuing down, but then it continued even more down in a minute, about 15 minutes later. The Chicago Business Barometer advanced 6.7 points to 47.1 in July. This is the largest increase in 13 months, bringing the index to the highest since March of 2025. However, the index still has been below 50 for 20 months. The increase was driven by a sharp rise in new orders and order backlogs, Meanwhile, production, employment, and supplier deliveries saw small decreases. July's special question asked how macroeconomic pressures are affecting your procurement decisions. Majority said, answered driving, cost cutting and efficiency measures. So people are trying to find ways to do cost cutting and efficiency measures right now. That's our number one thing they're doing. 40% responded they are increasing supplier renegotiations and contract reviews. And 40% said they're delaying investments in organizational projects. And 6% reported no significant impact. All right, this is also breaking. So this is the one that seems to have caused the market to go down. It was hard to tell, but people pay so much attention to this consumer sentiment index, and I really think it's bogus. I really think it's a terrible, terrible survey. Consumer sentiment confirmed the early month reading, moving down about 6% from July. Sentiment now stands at about 11% above readings from April and May, but remained 10% below the 6 and 12 months ago. Now, what was happening 6 months ago? That was the height of the excitement about Trump being elected. This month's decrease was visible across groups by age, income, and stock wealth. Moreover, perceptions of many aspects of the economy. Remember, this 500 or 600 people is all they survey. Buying conditions for durable goods subsided to their lowest in a year, and current personal finances declined 7%, both due to heightened concerns about high prices. Expectations for business conditions and labor markets contracted in August as well. That said, expectations for personal finances held steady. Personal finances held steady. This month, few consumers spontaneously mentioned the recent events from the BLS, the Bureau of Labor Statistics, and the Federal Reserve. People just didn't talk about that spontaneously. Year-ahead inflation expectations moved up from 4.5 to 4.8%. Just nonsense. It's going the opposite. And you'd think that people will be seeing that housing prices are going down. Now, maybe people just aren't paying attention. And it is August. People are taking vacations. The rise was seen across multiple demographic groups. Independents and Republicans both exhibited month-over-month increases. Expectations for Democrats were unchanged. So I really think this is a Democrat versus Republican thing. The Democrats, I've seen the analysis of where Democrats' heads are right now is that they have so much Trump derangement syndrome. I think it's based on the fact that there's so much success going on that it's just driving them nuts. And their numbers, you can see they're down, where people have their attitude about Democrats is down like 27% positive. Anyway, I don't know. This is I don't know why the markets would be down based on that. So Truflation is showing overnight at 215. That's up a tad. Their year over year is definitely up at 202. That was down around 165, 167, 168. So I don't know whether they adjusted it. They might have adjusted it. CPE, their year over year is showing at 2.34. That's about where it's been. The Trump numbers last night came in at 49%. So he's back up a little bit. And GDP is at 2.2. We'll get new numbers later today, which I'll report probably tomorrow afternoon. All right, so what's happened to the market in that amount of time? Well, it is starting to move slightly back up again. Tesla is down 1.81% at this point. You got the Dow Jones down 0.41, NASDAQ down 1.2. So Tesla is outperforming the NASDAQ because normally it would be 2 to 1 as only 1.6 to 1, something like that. And you got the S&P down 0.66. All of these indices are starting to move back up again. I would not be at all surprised going into the 3-day weekend with what I would call, I don't know, what would you guys say? Tell me in your comments. That seemed like good news to me. I think the markets are going to see it as good news. I think we might end up heading back into the green, especially going into a 3-day weekend. You've got the Magnificent Seven, mostly down. Actually, NVIDIA down 2.79. That's a little bit shocking, actually. Meta down 1.51. Apple and Google up slightly. The Cathie Woods are all down, except for PayPal, which is up slightly. Okay, so there you go. So the markets right now, at least, are saying, maybe I'd like to trim a little going into September. And of course, September has a really bad reputation in the stock market. So we'll see what happens. We've got Okay. I'm sorry, I was reading a headline to see if it mattered, if I needed to report it. I don't. Let's go ahead and get to the uh, bonds, which are up a little bit, up almost 2 basis points at 4.226. That's still good. So the information, the PCE has gone through, and even though the 10-year is up a little bit, the yields are up a little bit, not bad. So this would indicate that we're in pretty good shape. And I would think that maybe these yields will continue back down towards 4%, towards the threes next week. Remember, this is a 3-day weekend. Oh, I said that 3 times already, right? Oil is down this morning, half a buck to 64.11. Natural gas down 0.27%, back under $3, $2.94. You've got gold moving up even higher. Gold is now about this close to 3,500, 34.9770. Silver up 0.54 at 39.40, right at its all-time high. Copper up 0.58% at $4.49. That's about the highest it's been in a recent very narrow range. You've got the dollar down just a little bit this month. I'm sorry, just turned to mixed as I was watching it. And we have got Bitcoin down 3,475 to 108,656. Holy mackerel. Ether down 3.60 also to 4,302. And there you go. Those are the numbers right now. So quite a day. And by the way, the weekend I've got planned for you is absolutely amazing. Well, we got Larry Goldberg later today. Then tonight, probably Phil Beisel, although it might be Brian Wang. That's always a choice. I'll be recording both of those this morning. And depending on which one I think is more urgent, that'll be the one that shows tonight. Whichever one is not tonight will be tomorrow, where we'll have Cern Basher and probably either Phil or Brian. And then on Sunday, I'll have another Cern Basher. We'll have a special issue of Cern Basher. We're going to talk about Starship because it is so important. What happened this last week? The news doesn't know this. Maybe less than 1% of the population, maybe less than 0.1%. Maybe most of you who are listening, who are really on top of it, don't realize how important that Starship launch was. We're going to have a special report over the weekend on how important that launch was. All right, that's what's happening over the weekend. Be sure, if you're in town, even if you're out of town, sneak away and spend some time with this channel, because I'm going to blow your minds this weekend with the reporting that you're going to get. All right, let's go back and take one last look at Tesla before we say adieu. Tesla is now down 2%, so no, it turned back around. We're now at 339. So I'm probably wrong. Maybe it's going to be a rough Friday. I don't know. Who knows? Whatever it is, it'll all be different next week. I think we're going up and to the right. The market is, Tesla is not. Does that mean we couldn't have a drop? We could have a drop because S&P is stretched. I would not be shocked if between now and the end of the year, especially maybe in September, 5 to 10% fallback on the S&P, which could be a 10 to 20% drop on Tesla. Could happen. 100% could happen. But by the end of the year, Tesla's at 1,000. By the end of the year, S&P is at 66, 6,700, somewhere around there. Okay, that's it. All I can say for now. It's been great talking to you.